Good afternoon, daily members. Let us close the market. Please, may we have the closing prayers?
That was the closing gong live from the floor of the Nigerian Stock Exchange, bringing to an end trading this Monday, the first day of the week. And business editor Effiong Ekop will join us later in the course of the program, of course, for updates of trading at the Nigerian capital market. Welcome, I am Tolulope Ogunjobi. This is Business Nigeria. A warm welcome to you again. The Central Bank of Nigeria has directed banks and other financial institutions to immediately commence the issuance of electronic certificates of capital importation. According to the Apex Bank, the move will enhance foreign investments flow into the country. According to the Director of Trade and Exchange Department, a CCR is a certificate issued by Nigerian banks confirming the inflow of foreign capital, either in form of cash, loan, or equities or goods. The primary purpose of the CCI is to guarantee access to the official foreign exchange market for repatriation of capital and return on investments. The Minister of Agriculture and Rural Development, Audu Ogbe, says Nigeria could or will suffer scarcity of cow meat in the next future. According to him, this could be attributed to the quantum of cows consumed daily without commensurate calving. The minister disclosed that Nigeria faces an economic danger if the number of cows slaughtered and consumed as meat on daily basis is considered. He said currently about 100,000 cows are slaughtered in Nigeria on daily basis. Well, reactions and reports have continued to trail the exit of Nigeria out of recession. Now, a report by a famous international research firm indicates that the Q1 GDP growth was revised down to 0.9% year-on-year, a revision necessitated by lower than estimated oil production figures for March 2017, which dragged our oil output lower. Now, on the flip side, the agricultural sector grew at a slower pace for the fifth consecutive quarter, recording a growth of 3.0% year-on-year in Q2 compared to 3.4% in the first quarter of 2017. This trend has been driven mainly by weaker outputs in the livestock and fishing subsectors, resulting from the scarcity of grains. PricewaterhouseCoopers also observed that the second quarter resurgence in the insecurity in the Northeast might have negatively impacted crop production activities. The manufacturing sector expanded for the second consecutive quarter, although at a slower pace. Real growth increased by 0.6%. That's year-on-year on Q2 relative to minus 3.3% in the first quarter. According to PricewaterhouseCoopers, the slow growth is a reflection of the performance of sectors heavyweights, food, beverage, and tobacco, and cement, which accounts for 54% of manufacturing GDP. According to the PricewaterhouseCoopers report, Nigeria's economy is set for another long period of economic growth. This is evident as it keeps its 2017 GDP forecast unchanged at 0.7% year-on-year. That the real GDP will expand by 1.8% year-on-year, Q3, and 1.1% in Q4 of 2017. Well, this is based on its projection of a strong harvest season and sustained foreign exchange liquidity to support a broad-based economic recovery. However, the risks to PwC forecast include a decline in oil price and production and policy disruptions, which could hamper investment flows to the economy. Interesting one. Well, I have with me in the studio a partner and chief economist, PricewaterhouseCoopers, Andrew Nevin, is going to be speaking more on this. Andrew, it's great to have you join us on the show today.
Great pleasure, Tolo, to be here. Thank you.
0.55% out of recession. That figure is really worrisome. What do you make of it? We are not in negative growth, I know, but what do you make of being out of recession?
Well, as you say, I mean, positive growth is better than negative growth, but 0.55% is a very low number because we know that Nigeria's population is growing at 2.6%. So we're still getting poorer by 2% a year per capita. We need to grow at 5 to 7%. So it's good we've turned a corner, but we're just starting the journey back to some real growth rates.
Now, some of the sectors that actually influence this growth, if we could ascribe to them, we know manufacturing, agriculture, the oil and gas sector cannot be ignored too. Let's look at it one after the other. What's responsible? What are we doing right?
Well, let's start with agriculture. I mean, I think agriculture had a slight slowdown, but the reality is at the foundation of agriculture, there's a lot going on. There's big investments going into rice, into cassava, in some of the export crops. But in addition, what we're seeing is a lot of people want to invest in the whole food value chain. So downstream, you were talking about cows, how to process meat, how to process grains, how to process fruits, tomatoes. We're seeing a lot of that investment coming along. So we think slowly over the next couple of years, this is going to really start to accelerate. And we coined the term a few years ago, world food superpower. Nigeria should be the world food superpower. So we see a bright future for agriculture. On the manufacturing, yeah, there has been some improvement. Again, a lot of people want to do manufacturing projects. What the CBN has done has helped out a lot. People are getting some more certainty around the FX regime. We run a current account surplus, so that's eased off on that. The big issue in the manufacturing remains the power. We haven't moved far enough on the power. We can talk a bit more about that later. In terms of oil and gas, I think the short-term view is quite good. Production is up, prices have been relatively stable. But I think what the country should really be thinking about are some of the big announcements that have come out about the future of oil. So the UK has announced there won't be, by 2030, there won't be cars that use oil. France has announced a similar policy. Yesterday, China came out and said that it is shortly going to announce a policy to phase out cars that use petroleum. So now you've got China, the largest market for cars, saying they're not going to use oil. So the long-term future of oil, I mean, we need to be diversifying away from oil as fast as possible.
Indeed, and that's really worrisome. Now, in all of this, we have growth in the non-oil sector, obviously, but the issue of tax is not coming in. I thought the FRS has been doing some new things to try and, awareness, had some volunteers and all of that. Now, how far have we gone with our tax receipts?
Well, I think our view is we haven't gone far enough. We know that we only collect 5 or 6% of GDP in tax revenue, but from both the non-oil and the oil taxes, it's gone backwards, in fact. It's gone down because of the recession, but also because we haven't widened the net fast enough. If you think about it, we need to be at least at 15%. So people complain we don't have enough money for infrastructure, to pave the roads, education. We see the academic staff is threatening on strike because they're not getting paid what they want. So there's a shortage of money at every level of government. But why is there this shortage? Just because Nigerians are not paying their taxes. I mean, any country, no country can run on 6% of GDP in taxes, given all the things that we want to do. What I listed, plus we want an intervention program in power, intervention program in agriculture, intervention program in small and medium enterprise. We can't fund all that till people start paying their taxes. And there's been a lot of effort, and Babatunde Fowler, who runs the FIRS, he just got elected to be part of the UN Global Tax Expert Advisory. He did a fantastic job in Lagos. But we need to move faster on the taxes, and Nigerians need to understand we are not going to move forward unless we start to get from 5 or 6% of GDP, 10%, 12%, 15%. That tax revenue is available for our development.
Now, Andrew, this brings me back to the issue of the ease of doing business. With the moves made by the federal government and also the acting president, well, now vice president, when he was acting, there were lots of moves, some executive orders were signed into law to make ease of doing business and to help increase foreign direct investment. Now, how's that fared? I think there was a little bit of rise in the FDIs coming in. So are you saying that's a step in the right direction?
Yeah, I mean, I think from where we sit, we're happy with the progress there. One of the nice things about the ease of doing business is compared to 2 years ago, everyone recognizes how important it is. So it's recognized at the federal level, and you have the vice president driving it. You also have the president's task force on ease of doing business run by Dr. Jamoke. He's doing a fantastic job. And then you also have the Minister of Trade, Investment and Industry driving it forward. So there's a real consensus to drive it at the federal level, but it's also happening at the state level because of the ease ease of doing business, things have to happen at the state and the federal level. And so Lagos State, the governor here, is completely committed to that and spends a lot of energy to drive it forward. We know some governors in other states that are really starting to push it as well. So we're quite optimistic. Now, the one thing is, though, we're ranked 169th in the world, and the World Bank was just here, I believe, in June doing the next assessment. We may not move very far in the next assessment, because the reality is a lot of this ease of doing business, very detailed processes, making sure that there's transparency, so it takes a few years. But I think if we keep the focus on it for a few years, we're going to find that the next one out will be 130, 110, and that will really boost investment in this country, not just by foreigners, but people here. I mean, we have the same issues in running a business. We want an easier environment for our domestic investors as well.
There is this important document I'd like us to also talk about. That's the Economic Recovery and Growth Plan, introduced by the federal government. And now we're out of recession. Many have argued that this should be the time to properly implement this document or contents of this document. I don't know if you think that is also right.
Well, I think we think it's a fantastic document, and I guess I'm probably one of the few people in the country that's read all several hundred pages of it. But again, the problem is that the federal government wants to do some critical things, but it doesn't have the resources because of the tax issue. So in a way, that's why we view the tax issue as very central. It's depriving the federal government and then the state governments and then the local governments of the resources to implement ERGP and other things they need to do. But the other thing sometimes people don't realize is the federal government's borrowing a lot of money. So we just published, not PricewaterhouseCoopers, but the government just published, the Debt Management Office, our indebtedness. So 3 years ago, I think we were at about 12 trillion naira. Now we're at 19 trillion naira. So it's an increase of 7 trillion naira. Now, relative to the size of our economy, it's not a crisis, it's manageable. But why is it going up so fast? Well, it's going up so fast because we're not collecting taxes. So to try to do the things we do, we're borrowing, and that concerns people. But the other effect that sometimes people forget about is we have a lot of complaints in this country about high interest rates. Well, what's happening is, why are interest rates high? Well, they're high because we don't pay our taxes, and then we try to implement the programs, so then we have to borrow to do that. So the government ends up crowding out private investment. So if the government is borrowing at 17% on its T-bills and government bonds, what does the private sector have to pay? The government will pay you a naira debt. So the private sector has to pay not 17%, they have to pay 22, 25, 30, depending on the risky, and then it becomes very hard to invest. And you can see so many savers, so many people who are investors, small, large, are just opting to buy T-bills. But what happens then, of course, is that we don't have enough investment in the private sector. So it's all connected, but the tax issue, not collecting enough tax revenue from where we stand as PricewaterhouseCoopers, is maybe the single biggest issue that we need to start to address.
Indeed. Now, very importantly is the issue of Forex. We knew the effect of the Forex thing on the entire economy. But now there seems to be a little bit of stability. Look at the I&E window, special windows for SMEs, and all of that. And I think the access is getting better. I don't know what you make of this. We are over between 350, 360, 370 now. At least it's not been above that for some time now. I don't know what you make of this.
Things are improving. I mean, oil has been quite stable, volumes have been up, that's helped. But there's a few other things that are going on. I mean, to begin with, what do we spend our foreign exchange on to import? We spend it on food and we spend it on refined petroleum products. Well, food, when we start to produce more food, we don't have to spend our foreign exchange on buying food because we're making it here domestically. With respect to refined petroleum, not only do we have the Dangote refinery, which is coming along, but we have lots of modular refineries who want to do 100,000, 150,000 barrels that's helping. Plus, because the naira is so weak, we have lots of people that want to export things, cocoa, cashews. But I heard about a very interesting project of someone who is putting in at least 500 jobs into Nigeria. There's going to be like a call center or service center. So that's effectively an export as well. So people are finding ways to drive exports, and when we look out over the next few years, we think it's quite positive for the balance of payments. Then the other thing that's happening is because the economy has got a bit better, we're getting more foreign investment already. So that both foreign portfolio investment, people have seen that the stock market's rising because foreign investors are coming back. And then the direct investment takes a little bit longer because you have to figure out your projects and how to do them. But we know from our work, we have many clients clients from abroad that want to invest here. So we see that being positive over the next few years. I mean, even today we run a positive balance of payments at the current oil price. Of course, the really big danger is if there's something that happens politically or in the Delta that really drops production down. We're not out of the woods yet. We can't afford for production to drop to 1.3 or lower. And we all know, some of the discussions or the talk of the Niger militants at the present time. So that's a danger, quite a short-term danger.
Indeed. We're going to take a break now. Andrew will still be here and we'll be talking more of issues surrounding recession and, of course, the Nigerian economy. Stay with us. It's Business Nigeria. Thank you for staying with us. Well, we're still talking recession and, of course, the Nigerian economy. And I have with me Chief Economist with PricewaterhouseCoopers, Andrew Nevin here, who's been giving insights to some of those issues. Now, a lot has been said since this report came out by the NBS, and you've also raised some issues on the report also by PwC. Now, what do we really need to do to sustain this growth? Because it's necessary we sustain it. What are the things we need to do right?
Well, I talked earlier in the show about taxes, so I made that point. But I think that from where we sit, people need to realize in Nigeria, we need to create probably 2 million jobs a year for our young people to make it. Unemployment has gone up a lot in the recession. We have too many people unemployed, too many people underemployed in this economy. We all know that. We all know how people that are suffering and poverty. So we need to create 2 million jobs. And one of the implications of that is it's not a job for just Lagos or even the federal government. It's a job for every state in Nigeria. If this is going to work, if we are going to grow 5, 6, 7% like we should, every state has to be doing what it can do to drive its own economy. Now that has some implications for the resources it provides, but also for what governors need to do and their teams need to do, and to be attractive places to drive business. The other thing I think that we believe is very important is sometimes people talk about the importance of small and medium enterprises. And that's, I mean, it's absolutely true. I mean, in terms of the number of enterprises, the amount of employment. But I think people don't quite realize that the small and medium enterprises, what drives them is when they're in an ecosystem of a big company. That's actually where they thrive, where there's a big company doing well, and they're a supplier, they're doing something with the big company. I mean, if you imagine, for example, a football stadium, if it was active all the time, all the people that are doing the parking around the stadium and selling things around the stadium, they need the football stadium to do well. So we need national champions that are doing very well. So our conglomerates like Dangote or Honeywell or others need to thrive. And if you look at, sometimes people come and they say, well, Ghana or Nigeria and Korea were at the same level of economic development in the 1950s, and how is it possible that Korea is so far ahead? But if you look at the structure of the Korean economy, they have companies like Samsung, Kia, Hyundai, and 7 or 8 of the chaebols, and the government really made sure that they did well, and then everything else followed behind them. So I think that we need to make sure that our national champions, as they invest billions of dollars in the cases of Dangote into the refinery, into the agricultural industry, that they're really supported. And I think that's a message that's got to get through.
Andrew Nevin, I must thank you very much for your time joining us on Business Nigeria.
Thank you so much.
Speaking to the Chief Economist at the PricewaterhouseCoopers, giving his views on issues surrounding recession and the Nigerian economy. Well, away from that, we're now going to cross to the stock market, where TVC News business editor Effiong Ekop is standing by. Effiong, take it away. Give us updates.
Thank you, Tolu. The stock market here traded in the weak territories, and we saw very little volume of transactions, going on this Monday. According to analysts who traded on the floor, Mondays are the days that we normally have not very huge volumes because clients will need to deliver, their orders. And particularly today, it was raining, and that disrupted, some movements and some deals along the way. So the market actually ended about 20 minutes ago. I am here, having a dealer from H Securities. His name is Sam Ndata, to take us through the trade at his wins. Ndata, you're welcome.
Thank you for having me.
It was low trade today. Tell me why it was like that and how you manage it.
Well, thank you very much. Today is Monday, and Monday usually the trade is always not too high, because Monday is the beginning of the week, and people will come from their house. After trading, they will go and meet clients. As from Monday, Tuesday, Wednesday, Thursday, the market will be picking up because they have collected orders, which they will trade and possibly buy and sell.
We had so many companies, having their share prices, dip down, slow down, weakness. Let's see some of them. Who were there?
Yeah, the top gainers are not too much today. At least we have Air Services, we have Transcorp, we have UCAP.
UCAP is a subsidiary of UBA.
Yes.
Okay.
Yes. So, and in the losers territory, we have Zenith, we have Okumo Oil, we have Livestock Fees, and Jayeba.
Let's talk about Okumo Oil. It operates in the agriculture subsector, and this agriculture is the talk, around town. So why is Okumo, taking dip, in recent times? Why?
Yes, sometimes, Okumo is not good at doing serious adverts, or not so many people know what Okumo do. The Okumo and the like on that sector, they are not well known. People don't know what they do and what their company know. So that's why most people, and the price is at a high, people want to buy like growth stock, and possibly those who are in the lower territory.
I know that in those states where they operate, they own farms, large plantations, yes, where you have oil palms, and they process oil into different grades and sell
know
overseas.
This because you are in the media.
Okay.
Everybody don't know that.
Really?
Those that know that is some few brokers, some old brokers that have done factory visits to their establishment. Okay. But the new brokers that are trading on it don't even know what they do. And that's why we keep telling them, come and take brokers and do factory visit.
Okay, let's move down to livestock. Livestock also dip. It's also had its share price down.
Yes.
What about that?
Yes, there are forces of demand and supply always. If so many people are not asking for a livestock feed today, it will have to dip.
Sam, thank you very much for talking to TVC.
Thank you very much for having me.
Chief Dealer with H Securities, Sam Ndata, giving us highlights what they traded, on the floor this afternoon.
Thank you.
Tolu?
Thank you, Ekop, there for the details, bringing us up to speed with activities ongoing at the Nigerian capital market, even as trading has come to an end for the day. Thank you again. Well, crude oil prices in the global market remain relatively strong on Monday as OPEC moves to bring down prices. Now at the London market, the Brent crude trades at $53 per barrel. For the OPEC basket brand, price moves up to $52 per barrel. There was a story. Well, that's our package for you today on Business Nigeria. I must thank you very much for watching. On behalf of the entire production crew, join us again tomorrow for a fresh edition. Thank you very much. I'm Tolu Lokwe Ogunjobi.